Next up is Lake Resources. We're very lucky to have Managing Director Steve Promnitz and Chairman Stu Crow to present the company. This is a very exciting direct extraction lithium story that is listed on the ASX and the OTC with key assets within the lithium triangle in Argentina. It's large scale, very high purity, PFS ready project with visibility to producing 25,000 tons LC per year and beyond. So with that, guys, why don't you take it away?
Thank you very much, and welcome everybody that is tuning in live or listening to the replay. I'm going to be talking about cleaner lithium to deliver into this global growth in electric vehicles and battery manufacturing. You heard at the start of today's session, Simon Moores from Benchmark Mineral Intelligence talking about the major growth that's needed in lithium. And all of these lithium stories, I think, are going to go well over the next few years. What's different here is we're producing a premium product with an ESG benefit. Now, I will be making forward-looking statements. There is a disclaimer that you can look at your leisure, and this presentation will be available on our website at lakeresources.com.au. Our projects are focused in the lithium triangle, and the reason we're here is very specifically this. All of these projects have real scale. We're fortunate as a company to have a very large land holding, 2,200 square kilometers, 500,000 acres of mining leases over 4 brine projects. And they're in the heart of where all of the major production is occurring. We're going to be focusing on our Kachi project, which is in the orange circle, but our other projects, Cauchari, Olaroz, and Paso, are right next to current and near-term production. But this slide here really summarizes what we're about, which is 4 key things. First of all, cleaner lithium. In October last year, we demonstrated we could produce a very high purity lithium carbonate at our project. And in March this year, we demonstrated that that works very well in a standard battery. We used a 622 battery with Novonix. Now, the reason for higher purity is to get better battery performance. Technologies in batteries have just improved out of sight over the last 5 years, and the demand across the board is to get high purity products. Now, that doesn't mean that other lithium products are no good. It just means that many of them have to get reprocessed so that they're adequate for cathodes. This goes straight in. And having low impurities is key to performance. But the only way to do that is to use a new technology. Using the old traditional methods just does not produce a high purity, consistent product day after day, month after month. So we partnered up with Lilac Solutions, an unlisted company in California, and they're using a method very common in water treatment called ion exchange. And they had just adapted that to be used in direct lithium extraction. Now, ion exchange in water treatment has been around for 70 years. It's very well known in minerals processing. What Lilac has done is just simply adapt this for lithium. And the proof in the pudding is that it's been backed by the Bill Gates-led Breakthrough Energy Fund and MIT's The Engine Fund. But not only does that produce a cleaner product, it produces a much better ESG outcome. The physical environmental footprint of this is far lower, magnitudes lower than traditional processes. A much smaller land usage, much smaller water usage, and a low carbon footprint, which is common across brine projects. Now, naturally, when you're using a new process, you have to do the test work, and we've done that. More than 15 months of work at benchtop, more than 12 months work in a pilot plant in California. We would have a demonstration plant on site, if not for this global pandemic. It will be there by the end of this calendar year. We've demonstrated a very successful pre-feasibility study. We're in a definitive feasibility study, which should be finished by Q1 next year. And this is a large, scalable project with high margins. So let's break that down. First of all, the technology. What is it? All we do out of a traditional process is we replace the evaporation ponds. So imagine a dry environment, a dry valley like Death Valley in California. Underneath is a salty water. The lithium's dissolved in it. You pump it into evaporation ponds. The water gets evaporated, the salts concentrate. Then you have to separate out the lithium from it before you put in a lithium carbonate plant. And that's where you get entrained impurities. The benefit of direct extraction is you just take the lithium out. And by using ion exchange, you just extract the lithium. Because you haven't messed with it chemically, you can return that fluid back to its source. And by that very nature, you produce a high purity product quickly in the space of hours, not months or years. And that way you produce a high quality lithium carbonate process. You just keep redoing this over and over again every 2.5, 3 hours, processing water, boring, but very effective. To give you an idea of the footprint, on the left-hand side here, this is a satellite view of what evaporation ponds look like in the Atacama. The same in Argentina. Here for 80,000 tons per annum production of lithium carbonate, plus or minus, is 170 square kilometers. To producing 25 or even 50,000 tons per annum, we'd be looking at a footprint of 1 or 2 city blocks. So orders of magnitude lower in physical land use. And in water usage, very similar. All of that brine gets evaporated. Now, brine evaporators will argue, look, this is not a potable water, but this is a hyper-arid environment. It affects the water table. Here, we pretty much return all of that brine back to its source. So a much smaller water footprint. And it has a low CO2 footprint, like all brine production, in comparison to, say, hard rock spodumene. Because most spodumene then has to go through a pyrometallurgical process, about 950 degrees, high energy usage. That's why it has a much larger carbon footprint. And this is a key focus for electric vehicle makers now. We have a clear pathway into production. We've been running a pilot plant now for some time in California, a demonstration plant on site towards the end of this year. Our pre-feasibility study and our definitive feasibility study at the moment is focused on 25,500 tons per annum, but we're currently doing an expansion study in parallel up to 51,000 tons per annum. And that's been driven by the size of the demand. When we're having offtake discussions, pretty much the large offtakers just want all of this product. And so we're being pushed to expand this and also look at developing our other projects. You heard Simon Moore's comments about needing at least 10 times more lithium production over the next 10 years. This is a way to do it because the process is scalable. As mentioned before, it's one thing to demonstrate the high purity product, but you've got to show that it works in batteries. We've been fortunate to work with Novonix in Nova Scotia in Canada. They were a spin out of the Dalhousie University, thanks to Dr. Jeff Dahn. He went off to work for Tesla for many years and came back to work with Novonix at the start of this calendar year. They've demonstrated that our product works well in 622 batteries. We're going to have more results out of that in the future, but this is a way of showing to the battery makers that they can do their own quality tests, but we've already done it for them to show that this works, to give them that comfort. One of the beauties of producing a high purity product is that you get a healthy margin. So if you're a brine producer and only part of your product is battery quality, or maybe a lot of it is technical quality, that will get reprocessed somewhere. So will still be used in batteries, but unfortunately handing that margin to someone else, here you capture most of it because you're producing a consistent, high purity, high quality product from day one. And that's what the end users want. They want to see that and scalable. So it stands out in comparison to other processes. The project itself has a large resource. We actually have the drill rigs back here at the moment to shift more of the upgrade more of the resource so that we can fully support an expansion. But with our current plan of 25,500 tons per annum, that only uses less than 20% of this total resource over 25 years of production. And the resource is open laterally, it's open at depth. This could be much, much larger. And this is only one of our projects. The good thing is here, we pretty much control this entire basin with 740 square kilometers of mining leases. The pre-feasibility last year, which was refreshed in March, has some pretty compelling economics. On a capex of 540 million US, producing 25,500 tonnes per annum, we've got an EBITDA line around 260 million for 25 years. So you can basically, that's half your capex number in 1 year of cash flow. Our cash costs are running around $4,100 a tonne. That's down the low end where brine producers tend to travel. We could actually lower that number a little bit further because we're looking at solar hybrid power. But what's been great just in the last couple of months is we've announced how project financing with export credit agencies, they're actually quite keen to fund around 70% of this with debt over a 10-year time period and at very low interest rates. So we could see very healthy cash flows here, and we'll be updating the market on that in a few months' time. This is basically what the project looks like. It looks like pretty much any other lithium brine project. The difference is in letter A on the right-hand side is a warehouse with those ion exchange modules, and that's what replaces the large evaporation ponds. So orders of magnitude smaller footprint. Our production timeline. So we're focused on getting the definitive feasibility study and the environmental social impact assessment done by Q1 next year. In the latter part of this year, we'll have a demonstration plant on site, and we'll run that in parallel with the pilot plant in California. So we've got enough information for the definitive feasibility study and also enough product for potential offtake partners. The financing, we're in those discussions at the moment. We'll have more to say in the next few months about probably 1 or 2 export credit agencies that we'll work with. And the aim is for them to come inside the tent so that they're pretty much ready by the time we finish our definitive feasibility study and environmental social impact assessment. So indicatively, we would look at having financing close around middle next year, maybe dribbling into Q3 next year, and then into construction, aiming for production in the first half of 2024. Because of that expansion case, we'll probably be talking more about that soon after the DFS, and you may expect an expansion soon after we go into production. Our Kachi project is no other project. As I said, we've got 3 other brine projects. Our Kalchari project is literally right alongside Lithium Americas Gangfang's project at Kalchari. We demonstrated, we had the same brines in drilling back in 2019, and we'll be doing some scoping study and resource drilling later this year and into next year. We're just doing some test work on direct lithium extraction in the near term. A quick corporate snapshot, about 18 million US in the bank at the end of the June quarter. We haven't finalized those numbers yet, so there may be a little bit of movement in that. A market capitalization of about 280 million US, and since January, we're really starting to see a lot of institutional interest in our register out of the EU, clean tech funds out of the US, ESG funds out of the EU, and sustainability funds and small cap funds in Australia. Despite that, there's still plenty of upside in this story. We're trading at about 15% of our NPV. Others are trading in the range of 60 to 80% or even more. Our nearest peer would be Standard Lithium, today uplisted on the New York Stock Exchange as SLI. They're a little bit ahead of us, but with $1 billion market value, you can see there's still plenty of room for us, and quite a bit of research has been released showing the upside here. Naturally, you can't do this without having a strong board. We've got 3 out of the 4 board members here are Spanish speaking, and you could expect an addition to this soon, with a solid team on the ground that we're now growing, and that team has been with us now for a number of years. So in summary, a cleaner lithium, high purity, with genuine ESG benefits that can only be delivered by using new technology. This is the sort of product that the off-takers are absolutely demanding now, and that's both EV makers as well as battery makers. You heard of the supply squeeze, so I think it's going to be good for all lithium projects, But I have to say, in the conversations we've had, the focus here on these ESG benefits is really, it's quite pleasing, particularly out of Europe and some of the EV makers. So now I'm going to hand back to Joe and the team for questions.
That's perfect, Steve. I appreciate that. Quite a bit of questions here, so I'm just going to try and consolidate some of them. You had mentioned off takes, and we're starting to see a bit more of that. One of the questions here was asking about Lake's progress there, and does the offtake have an involvement in processing the definitive feasibility study? Do they have a hand in kind of navigating that?
So the short answer to that is no. If I could summarize offtake conversations, so this time last year, in the middle of the global pandemic, we would have crash tackled somebody for offtake. In December, January, we saw a number of the potential offtake partners coming back to us, talking about how we could work together. In the last 6 to 8 weeks, that group has expanded significantly because now there's an understanding that there's going to be a shortfall in supply. We're targeting both a tier 1 company, preferably an EV maker and a battery maker, and then getting the right sort of commercial terms and having at least 2 of those, probably one released before the DFS and perhaps one soon after. And that'll be important in then finalizing the finance and making it happen.
Perfect. Okay. In terms of the DLE process, I think, obviously that this is not something unconventional. It's something that's used across the uranium industry, the IX circuit. There's a question here in terms of, whether or not it's patented. If there's any sort of license agreements, that means that this process will be used only by Lake. So if you could provide a bit of color there.
Certainly. So Lilac owns and has that technology patented. We do not have a license agreement. We are in a partnership with them. So they will be working with us through the development of this project and for the life of its operation. And so you could reasonably expect a much closer involvement of them in the development of this project, either directly or with some of their backers. We will be releasing more on that soon because we've been working on an agreement which will stand the test of project financing. So pretty much when you've got technology, normally it's a licensing arrangement. In this case, it's a direct partnership to ensure success.
Yeah, one thing you had mentioned earlier in the presentation on ESG, and I think it's certainly important to highlight, is definitely the water intensity usage for traditional evaporation. We had spoken about some of the ESG benefits there, and seeing what Europe is doing in terms of defining carbon footprint. So if you could just walk us through that, and obviously the benefit that DLE presents.
Okay, so first of all, brine producers have a smaller carbon footprint, so they are naturally going to be marginally preferred, particularly by EV makers out of the EU. However, the traditional evaporation process does use a lot of water, and that's a real concern. And you may have seen Reuters reported just recently how a major German initiative headed up by Daimler is actually reviewing that whole process. To that end, the only commercial DLE operation in the Western world is Livent, which is just up the road from us at Kachi. And they signed an offtake agreement with BMW in March, and BMW made much of the sustainability benefits. So there is clearly a win. So when we talk about an orders of magnitude smaller land footprint and water usage, that's important to the EV makers. And it's also important to the local communities because these are arid environments and naturally they won't have access to any fresh water that is potentially available.
That's perfect, Steve. Appreciate that. And thank you, Stu, as well. We are at a time here. We do appreciate you guys. On behalf of Red Cloud, I'd like to thank you for presenting today.